Hello everyone and welcome to HDFC Life presents live sessions partnered by ET Now, a series that solves all your concerns and misconceptions around life insurance and equips you with knowledge to make informed decisions. Life insurance as a financial resilience tool is relevant across age groups and stages of life, and this holds true even when you are planning your retirement. For any successful retirement planning, life insurance serves as the foundation, helping people achieve their financial goals without undue stress. However, despite the cruciality of retirement planning, many people remain unaware of the essential details regarding the relationship between the two. And hence, this year HDFC Life is focusing on Bridge the Gap, with the aim of bridging the gaps in India's financial stability and security. And today, focusing on the correlation between life insurance and retirement planning, our experts will help you decode the factors that matter, the tips to keep in mind, and how to build a secure future for your loved ones. To further shed light on this topic, today we have Mr. Ravinder Singh, Managing Director, SVC Co-operative Bank Limited, and Mr. Vikram Vaswani, Head Key Alliances, HDFC Life. All right, Ravinder and Vikram, thank you so much for joining us today on HDFC Life live sessions. We often hear about the retirement or pension gap that exists in India. What does this actually mean, and can you help our audience understand this, Ravinder?
Thanks a lot. And see, retirement age or a retirement gap or a pension gap, as we call it, is the deficit that we have between the money on track that we are going to receive at the time of retirement, be it our saving or the disposable assets or like that, and the money actually we should have at the time of retirement if we want to keep the same standard of life. For example, if my monthly expenses are 1 lakh rupees per month, is my saving sufficient to take care of those expenses post my retirement, because I would like to keep my the same life standard also. And this problem is really very prominent and burning issue is because there was a survey conducted, and in that survey, between the age group of 50 years to 60 years, the people who are going to retire in the next 10 years or 5 years, around 90% of them regretted that they did not start planning their retirement well in advance, and that's why they are short of funds. They are having deficit. Also, if we see, around 1/3 of the respondents, they said that their retirement income, retirement saving might last only 5 to 10 years, not more than that. And why it is burning issue? Because by 2050, 20% of Indian population would be above the age of 60 years. So therefore, there would be requirement of next retirement corpus of next 30 years. And this is why there is a need to create a very robust retirement corpus to take care of our future expenses, medical expenses also, inflation also, apart from that our dream goals also for the retirement.
A lot of surveys have been conducted, and the surveys reveal that nearly 47% of elderly people are economically dependent on their families for income, and another 34% are relied on pensions and cash transfers. Please help us understand how life insurance can help bridge the gap in retirement savings, Vikram.
Life insurance is the only product which helps you create an asset immediately. If you were to invest in any other product, if something happens to the family, bread earner, what happens is you get back your investment with a return. But what happens in life insurance is it creates an asset upfront. So for example, if I buy a 1 crore policy, that 1 crore asset is created on day one when I pay my first premium and the policy is issued. And if something happens to me, this 1 crore can come in handy for my family, to take care of their future needs. Because as you evolve in your life stage, your aspirations will change, your needs will change depending on what your aspirations and goals are. So obviously life insurance at the core of it helps you really ensure financial stability. As far as retirement is concerned, it is it's a very important need. Not many people think about retirement. When we speak to people about 35, 40 years of age, they say, I think it's 20 years away, right? And that obviously is a common behavior that we see. But ultimately, whatever savings one has, you're not going to that saving will help you in the short term. Is it good enough that it's going to help you for the next 20, 30, 40 years to sustain your lifestyle? The answer may be, in all cases, maybe a no. So somewhere one has to start. And the essence is, all of us know, the benefits of starting early. So if you start early, you can probably reach your goal in a much more lesser amount than you probably need when you start at 50. So how life insurance helps is, we have a lot of, options on the retirement side. We have a lot of pension plans. So essentially there are two kinds of pension plans. One is where you kind of, build a corpus over the years. So for example, somebody who's at the age of 25, 30, now he knows that he's going to retire by say 55. People want to retire early nowadays. They say I want to retire by 50, right? Some people want to work till about 60. But typically on an average, people retire by 58 or 60 in India. So if you are at 25, 30 years of age and you have 30 years to go, even if you start your retirement planning with a small sum, it does wonders, right? Because it helps you with the power of compounding. You are able to reach your goal. Now essentially in this case, the goal is to the amount of corpus that you really want to generate over the next 25, 30 years. So we have pension plans wherein you can pay a regular premium, build your corpus, and when you want to retire, you can choose your date of retirement and then start your annuity, right? So these are deferred pension plans. Other than that, we also have annuity plans wherein, you can take an annuity say after 5 years, after 10 years, depending on when you want to start your pension. Again, there we have options like you want to pay regular premium, you want to pay single premium. So the biggest challenge that people have today is that, okay, I will, save and invest in a plan and build my corpus, but what is the pension that I'm going to get? Is it going to be enough to take care of my, standard of living, the income that I need? Will it beat inflation, etc.? What we have done in one of our products is we say that today when you sign up with me, okay, I will guarantee you the rate of return which you must get, when you really start your pension. Now that has really helped because people get the confidence saying that, okay, 10 years from now, I'm investing today, 10 years from now, this is the rate of pension I'll get. So as far as retirement is concerned, I think the advice is to start early, get the power of compounding to work for you, and reach your desired goal, and then there are a plethora of options in which you can take pension.
Inflation can erode the purchasing power of retirement savings. How do life insurance products help protect against inflation? And what strategies can retirees use to ensure their savings keep pace with rising costs? Ravindra?
Yeah, as rightly said, inflation can really play havoc with the plans we are having for future. For example, as I said earlier, suppose 1 lakh rupees is my personal expenses, family expenses at present. But even if we take 5% inflation, then with compounded effect, within 14 years, I will be requiring the double of that. So then we have to plan accordingly, and we have to, as rightly said by Vikram also, we have to choose instruments which take care of inflation also. So inflation is there. Secondly, increasing medical needs would be there. Medical expenses would be there. Other expenses, and then as I said that there might be dream goals also that on my retirement I'll go vacations every 3 months with my wife, or I'll visit my children staying in US every year. So many other dream goals people are having on retirement. So they also have to be factored, and then one has to plan as to how much retirement corpus. This financial planning has to be done in advance. This would be the financial corpus I would be requiring. Secondly, at that time, he has to see his personal financial position at present also. How much is the income, how much is the saving? And as Mr. Vikram said that start early, I would say that today is the right day for everybody to start their investment, financial investment for retirement. There are so many variations in the market, in the pension, and everybody has a different risk appetite and different needs also. Like if somebody is having high risk appetite, he can look for variable kind of pension plan where the money is invested in the stock market and the returns are based on the returns that we get from the stock market. If somebody is risk averse, or if somebody has reached in the age of like above 45 or 50 years, then he can go for guaranteed returns pension plan also, where the returns are guaranteed throughout the life. And other than that, why insurance plans are better as compared to the other products available in the market is that tax benefits are also there. So, if I am investing in these plans, then tax benefits are there, and the money saved from that tax benefits, tax saving, they can also be reinvested in the retirement instruments. And that is why the idea is that we have to build a strong, robust financial safety net for us.
In Tier 1, there is a reasonable awareness for retirement planning, and people are actively looking at investment options that can help them plan a comfortable life post-retirement. But as we move to lower tiers of our country, what trend do you see is existing, and what trend is there, as a shift in the mindset, Vikram?
Yeah, so what has happened, in the last 20 to 24 years that, private life insurance has been there, I think a lot of focus has been on Tier 1, right? And given the, strata of society that is there in Tier 1, people are at least thinking on those lines, saying that I need to do something about my retirement, etc. Now, in contrast, if you look at Tier 2, Tier 3, a lot of population is the self-employed guys, people in business, small businesses, SMEs, etc. And unlike a salaried employee who knows that he has to retire at 58, 60, example, businessmen don't have any definite rate of retirement. There's no definite age. So they can retire when they want, and hence the focus on retirement planning is just not there. We've seen a lot of research, and we've seen as many as 80% of the people have not even started thinking in Tier 2, Tier 3 on retirement planning.
It's not even a buzzword there?
It's not a buzzword. See, people at that, Tier 2, Tier 3 are more focused on, taking care of the needs and aspirations of the family, setting up your house, buying a car, and so many other goals that you have in life.
And because it's business, you always have someone or the other running up for you.
Yeah, right. So, there is no definite age, there is of retirement, and hence there is no focus. So what we are doing is, there is a lot of disproportionate focus that we as a company are putting on Tier 2, Tier 3 markets to ensure that, we get the growth. Now, if you look at any industry today, the growth is coming for Tier 2, Tier 3. If you look at internet penetration, it is at a record level in Tier 2, Tier 3. So we are focusing on, Tier 2, Tier 3. We are, along with our partners, focusing on those branches. We ourselves are setting up branches in Tier 2, Tier 3. We are also looking at agents, getting employed in Tier 2, Tier 3. Because somewhere we need to, they need to make a start. And again, like, Ravinder also mentioned, there are many options on, pension plans that are available. There are regular pension plans, there are single premium pension plans, and depending on the risk appetite, we have pension plans which are of the traditional nature, wherein the returns are guaranteed. So you exactly know how much you pay and what are the corpus that you're going to get, and then, like I mentioned earlier, what are the pension you're going to get. There are other plans where you kind of participate with the company's profits. And there are the unit link plans which are for the investment savvy people. So these are the kind of plans which are there. And plus, like I mentioned earlier, there are annuity plans. So suppose if somebody is not done the retirement and he's just at about 45, 50 and he knows that he wants something coming in his way, say for the next 10 years. So he can invest in a single premium plan and still get the retirement done, retirement planning done, so that that steady flow of income is there, from a particular age. And the beauty of retirement plans is that once you've signed up for a retirement plan and once the annuity starts, that annuity is guaranteed for your life. Right? So whether you live for, say, 30 years from your retirement, 20 years, 30 years, 40 years, and there are options, like I mentioned earlier, wherein there's a joint life annuity, wherein, I take an annuity, it's for me, it continues for my spouse, and then the corpus that I had created or I had invested, that goes back to the nominee. So that's the most popular option in India. Now, given that, people are more savvy, they're thinking about inflation, etc., we also have options where your annuity can increase every year. So typically, if your inflation is anywhere between 5-6%, you can decide to have a higher, annuity every year. So it is obviously a corpus is X. Now within that X, all these combinations can be worked out, and you can choose and customize the annuity the way you want it. So a lot of options, and I think a lot of efforts being made on Tier 2, Tier 3 markets by, many companies like us, and I'm sure it will bear fruit because we see that the demand across products is coming in from that market. We see that trend coming in. We see our business picking up from these markets, and I think in some years to come, I think we'll see a lot of demand and a lot of customers planning their retirement even in tier 2, tier 3.
All right, now let's move on to our next segment, which are the questions from our viewers. So from across the country, people have shared their questions around life insurance and retirement planning with us. So let's see some of these queries and let's get them solved.
Hi, I am Shalini. I am 40 years old. I am from Ghaziabad. I am working with IT company. Is it too soon to start for my retirement planning?
So as I said earlier, today is the right day for me to start investment. However, since you asked whether you are too late, too soon, I would say that you are too late.
Okay.
Because in my opinion, with the first salary check, you should have started your retirement planning so that you can get maximum benefit of compounding. And not only compounding benefit at the end of the career, but also to take care of any kind of uncertainties associated, like you said that you are in private sector. There are various like COVID happened. So many events are happening. So are we ready financially to take care of those unforeseen circumstances also? And when we start early with as I said that with first check of my salary, then I am taking care of those uncertainties also. And not only that, not only retirement, but I can plan my expenses as my life progresses. At what age I am going to get married? At what age my kids are going to college? At what age they are going to abroad? At what age they are going to be married? So many milestones are there in everybody's life, and with that milestone, with this kind of planning, we can align the milestone with the financial safety net also. And that can be possible only when we start early. So whatever has happened, but today you start planning for that, your retirement corpus, and build it. Still 20 good years for you. 20 years you can build a very, very robust corpus for you.
Hi, I am Saurav Dev. I am from Indirapuram. I am 55 years old and I'll be retiring after 5 years. I will get a peace of mind if I get salary every first day of the month. Are there any insurance plans through which I can get salary after my retirement?
So we have, I mentioned deferred annuity plans, wherein you can invest now and start the salary, say in this case, after 5 years. So once you have reached that age, we will give you an option in terms of what pension you want to choose. And once you choose the pension, it will be pension also can be paid annually, it can be paid monthly. What happens after retirement is, one is retiring from work, right? Obviously the life goes on. And today on an average, we spend about 8 to 10 hours, working and commuting to our offices, or even if you are in a business, etc. So obviously after retirement, all this time is yours. Okay, all the plans, the dreams that you had, kept away for paucity of time, saying that we'll do this after retirement, we'll travel the world, etc. I think you have enough time, but do you have the funds for it?
Yeah, exactly.
Similarly, there will be rising medical costs, and like Ravinder mentioned, are you planned for it? Because one medical uncertainty can set you off by a few lakhs. So obviously, it is very essential that you plan well. Just for a rule of thumb, if say for example, if I need 2 lakhs per month, in terms of my expenses, your retirement corpus should at least be 30 to 35 times of the monthly, required. So if you need 2 lakhs per month and you're going to need 24 lakhs a year, so your corpus should be at least 30-35x of that.
Hi, my name is Aftab and I am from Asansol. I am 50 years old and I'm running a small business, I'm doing well in that. And I have managed to save some money for my retirement. But how could I determine if my current saving is sufficient enough for my retirement plans?
For that, 2-3 fundamental questions you have to ask yourself. Okay. How long you are going to work in your business? How much you are earning at present? What is your and what is your lifestyle? What is your present expenses? And based on that, you have to plan as to whether you are having next 30 years corpus based on your present savings and disposable assets, whether they are sufficient or not. And thumb rule is the same, as I said, that see, we have to take care of the inflation also. So, taking care of that, then there are various instruments available. There are various calculators available for your retirement planning, which can help you in that. Everybody has his own different story, life story, and everybody has his different life goals also. So, based on that, you have to choose your plan, and you have to choose your instruments, and you have to start planning for that.
All right. In the end, message for our viewers on the same line.
Yeah, so I would say retirement planning is very, very essential. So start early. If you're not started early, at least start today. Like Ravinder was mentioning, today is the right day. And get the power of compounding to work for you. Depending on your risk profile, choose the right plan. You can choose what are the kind of corpus that you really need, for pension. And I think the earlier you start, the better it is, and that will make you more financially secure.
Definitely. Thank you so much for being on the show today. Thank you.
Thank you.
All right, so with the insight from the discussion, I'm sure that you'll be able to make much better impactful decision around your retirement, and I hope that you will help us bridge the gap in Indians' financial resilience by initiating discussions and conversations and sharing your learnings ahead. So take the first step today and plan for a better and a much more secure future for you and for your loved ones. I will see you again. Thank you so much.